Pay attention. We are going to be going through everything you need to know about volume, why you should be using it. Yes, you should be using it. Do not just rely on price action alone. What is volume? It's the total number of shares or contracts traded in a period of time. Those are the bars that you see on the bottom half of the chart. Okay, the top half is going to be the price action candlesticks. It's the silent partner to price action. It means for price to move, you need volume. Yes, I said that. Correct. Okay, provides context and provides validation. Price doesn't move without volume. So that means when you have higher volume, you should get larger price movements. If you don't, something's fishy. That's where volume analysis is going on, okay? Confirming price trends. Rising price plus rising volume. That means that's a strong bullish trend most of the time, depending how the price candlesticks are looking, okay? Rising price and declining volume, that indicates a weak rally, right? If you have price going up and you don't have interest following it, right? That indicates that something is wrong, right? There's not participation in that. So that's something to look out for a potential reversal, right? Falling price, rising volume. Okay? That's a bearish trend. Makes sense? That could be possible distribution, especially if they're distributing to some type of support. We will show an example of that later, okay? Falling price and declining volume, that is a weak pullback, okay? That can be an example of bearish exhaustion. So let's take a look here. Strong bullish trend. Take a look at that nice big green volume bar. 60 million shares of volume on GameStop came in on September 20th, some around that date, right? Look what happened. Pushes the price up pretty aggressively. Okay, look what happens. Volume drops off after that. Price follows. Price is dropping off, right? It's actually slowly pulling back until we get volume coming back in. What does that tell us? Okay, they said price wants to go where the volume is trying to push it. Makes sense? The volume is pushing it up. The price action is not fighting it. Makes sense? That's an indication of a strong bullish trend. You can see when volume comes in again, price starts to push up again, right? So there we go, indication of strong bullish trend. Weak rally or bearish exhaustion / a potential reversal, right? Look at where I have circled. It's kind of hard to see over here, right? Look at that little rally right there, okay? Look what happens in the volume. It's low. If this was actually going to have some kind of reversal or follow through back to the upside, we would see volume trying to push it up, right? Volume is interest. We want to see interest pushing it back up to the upside. In the event it's a reversal, it's not, right? So what this means by it's a potential reversal, it means we're going to reverse back down, right? So that is a weak rally. Same thing on the other side here. You can see on Tesla here, we get bearish exhaustion, volumes dropping off as prices are increasing. That's an indication there is no interest to go back up. All the interest is at lower prices. That's how we would be forcing the market down. Strong bearish trend. NVIDIA, okay, before the 2025 beginning of the year dump, right? This was understood. Look at the distribution that we were having. Look at the volume increasing as prices were getting pushed down here, right? There's an indication. Volume's increasing, prices are pushing down, right? Volume is increasing, and that actually pushes the price down. Volume is increasing, and that pushes the price down. That's a strong bearish trend. There is no way that this means longs unless something happens in the volume where you're starting to see capitulation. We'll go through that later, right? So that's an indication there. So weak pullback. Some people might have said, oh, GameStop's over, from May 13 of, I think this was last year, 2024. Oh, the run is over on GameStop, right? We went all the way up to $80 pre-market. We actually opened $65, somewhere like that around here. And we pulled back, okay? Since that, it was maybe weeks or so, just dead. People saying, oh, is GameStop going to push back up? Well, it did push back up, but what you would have wanted to see was volume coming back in. Volume did come back in, right? Over here, we can see volume starting to come back in. We never took the low of the candle where the volume started to come back in, right? It was holding. Volume dropped off. See on that, another weak pullback here. We had volume forcing it up, pulling back, That's an excellent area to get an entry there. And then we see volume pushing it up again until we get some kind of capitulation to the downside here in this pivot. So we have volume pushing it up, guaranteeing we have buyers in this market, but then those buyers get taken advantage of and we capitulate here. Okay, that's a little bit more advanced, but that's an example of a weak bullish pullback. Okay, so let's talk about reversals. Look at that. This is Tesla 2023. Look at the amount of volume there. Now, not just one bar, not just 2 bars of volume, not just 3 bars of volume, not just 4 bars of volume. Guys, this was a literal surge. The amount of interest at those prices, that was an opportunity. If you were able to grab that, the volume was so clear, right, that this is what the market wanted, was to go back to the upside. Everybody was interested in Tesla at those low prices, right? And not only were they interested at low prices, but it's the interest that pushed it up. You could be interested at low prices and you're actually keeping the market down. Makes sense? But the volume was coming in and pushing the market up. The volume was coming in and it was turning the market around. That's an example of capitulation there, okay? So that's how you identify a reversal that's going to hold, right? There's actual interest there pushing the market, turning it around. That's a low that's going to hold, right? So I'm talking about this. And also you can see here as well, volume comes in, pushes the market back around. That's another example of capitulation from these sellers. And then we push the market up, right? That's a great example there. So look here, exhaustion, another example. We get, this is the same photo from earlier, okay? Volume's pushing the market up. Low volume pullback here. Volume dies down. Price follows the volume, right? And then we get volume coming back in, pushing the market up. Great bullish trend there. So climactic volume. This is what we were looking at earlier. Capitulation. This is on a much larger scale. You would have thought the volume just started there in general. Guys, look at the difference in volume from 2020. There was almost nothing. Look at where my mouse is. There was almost nothing, guys. And we just pick up like crazy in 2021. Something happened in Mara. The equity changed. There was bias change. Something happened. Shorts had to exit their positions immediately. Mara was no longer valued what it was valued at. They needed to get out of their position. This was a capitulation setup. All right, you can see the amount of volume coming in, forcing the market to the upside. We must have went from nothing. I mean, either dollars or pennies. I think it was dollars. A couple dollars. Push it up to $5 a share. That's 500%, guys. Then we got a low volume pullback here until volume starts pushing the market back up again. So that's a strategy. Believe it or not, that's my bullish exhaustion strategy. You see volume coming in, let it die down. Try and snag your entry when volume starts coming back in the market here, and you can follow it back to the upside. You can target the highs or something like that, whatever you like. I usually just get in and trail my stop, and that's an excellent way to just use volume like that on a bullish exhaustion setup. So distribution versus accumulation. People say this all the time. Oh, we're in a distribution phase. We're in an accumulation phase. How do you verify that? Right? So look at the shaded gray rectangular area that I've marked there. We're verifying there's buyers there. Okay, how do we know that? Look at the volume. We pushed the market down, volume increased, pushed the market down into this area, and we're actually getting rejection, right? We're getting bearish exhaustion, because when volume actually drops off, okay, we're going higher. So it's saying there's no interest back to the upside. There's only interest to the downside. But there's buyers there, right? There are buyers in this location. Now, these might be the uninformed buyers, right? People like you and me that are just, we see a support, we draw a support line. Oh, yeah, we're going to buy at the support, right? Smart money obviously took advantage to distribute shares to this support. That's what this distribution actually is. They're pushing the market down into a support here. They're selling to the support. Understand that. Where do buyers come in at? They come in at support or resistance that is turning into support, right? They're buying up the resistance, but usually the buyers are going to be at support. So if I wanted to sell a lot of shares, I would have to sell to buyers, right? That's the thing about the market. Every buyer is a seller. Each time you get one of these volumes printing, right? 900,000 volume here, that's 900,000 transactions. Every buyer and seller completing a transaction is one volume, right? There was one transaction finished there. Okay. So, yes, these increased volume bars, red or green, doesn't matter. It's a measure of interest. It's a measure of transactions that are happening. And we can verify that if there's more transactions happening, the lower that prices go as volume is pushing the market down, there's more transactions happening, right? They are selling to buyers. They are willing to sell lower and lower more. Make sense? That's the difference. So, yes, they were distributing into an area of support, and eventually the buyers are unable to hold it any longer. And now we're starting to get some kind of volume dropping off here from the increase. We're starting to see some volume decrease. We can expect now this is now, right? So I would in fact be forecasting, but I would expect we're gonna see some kind of range, or at least somewhere going back up just a hair, right? While volumes dropping off. We can expect that until we get another opportunity to reshort the NASDAQ. So let's continue here. Lastly, guys, liquidity this is the most important thing. People think, oh, I don't need to use volume. You don't need to use volume now. That's the thing. You might think you don't need to use volume. I'll just be a price action trader. You can only do that for so long. Have you ever thought about that? As your account grows, as you legitimately trade with larger size, you need to know where the buyers and sellers are. You need to know where the liquidity is at. You need to know who is going to be able to purchase your position from you. You do not enter into a position without understanding if you can exit the position at your price that you want. Period. Make sense? So we hear all this, oh, I'm a price action trader, oh, I'm this and that. Right now you are. Until you're a large institution, right? And I'm not saying, I'm just saying the reason why you want to focus on reading volume is because that's what large money and institutions are doing. They are looking at volume. They don't understand liquidity. So this chart that I have in the background, look at the gaps in between the candles, all this. It looks weird. If we just go back, look at the difference. Look at the difference in the candles, okay? This is a 3-minute chart on AutoZone. AutoZone is just, it's a grinder on the daily chart. But intraday, it has no volume, right? Only 5,000 shares traded in 3 minutes towards the close on the 11th. That's like nothing, right? There's no volume on AutoZone being traded. Do you think if I was a large institution and if I wanted to sell 1 million shares of AutoZone right now, what do you think that would do to the price? Right now. If I want to sell right now 1 million shares, we only had 5,000 shares or traded at the close of the 11th. I would destroy AutoZone's price immediately. I probably wouldn't even send it to $3,500 a share. I probably wouldn't even sell it to $3,400 a share. I would tank the price if I marketed $1 million a share. Makes sense? You probably wouldn't even be able to do that, depending on how many orders are available. Makes sense? There is nobody wanting to buy your shares of AutoZone at $3,500 a share. Nobody. There's a few, but not for, you have 1 million shares you're trying to unload. It's going to be a while for you to unload it. Understand that. This is the most important aspect of volume, especially if you're trading options and options contracts. Make sense? If a contract does not have volume, You do not want to be trading it. Volume, volume, volume. Stay understanding of your ability to read volume, right? So the power of volume analysis, let's close it out. It's 15 minutes already in the video. I don't want it too long. It's confirming trends, guys. It's showing us where the interest is. If we have interest pushing the market up instead of pushing it down, guys, that's bullish, right? We're able to identify reversals if volume's dropping off, right? If volume's picking up, there's a lot of interest at a low. That could also be a reversal sign, right? Gauges breakout strength. So we know that if we're actually buying the resistance, if we're actually paying the resistance, that could be a great opportunity to break out, right? Because that shows there's legitimate interest to grab those shares at that resistance, right? So, and we're assessing liquidity, just like we looked at earlier with the candles on AutoZone, right? And it reveals market player participation. So we know what the market is actually thinking by the amount of transactions that are displaying at each price. Understand that, okay? So, lastly, guys, do not trade without volume. It's crucial. If you trade without volume, I mean, that's like you're not looking into your trading future. I'm saying you only need to not worry about trading volume now. So start worrying about it now. So when you do grow as a trader, you don't have to worry about it then. Makes sense? Because you're gonna have to worry about it. It's gonna pop up. Do it now. Focus on it now. Learn how to read volume now. It's the greatest trading tool. Study larger traders, right? Very, very rarely you're going to find them not mentioning volume, not mentioning order flow, not mentioning liquidity. It's very rare you're going to find that. Okay? Enhance your trading style, guys, with volume analysis. That's it. Like, comment, subscribe. There is a link to my Discord. It expires in 7 days. If that link is expired, wait till the next video. Okay? Cheers, guys. We will see you next time.